Hey traders, welcome back to another video. If this is your first time joining, my name is Akil Stokes. I'm a professional trader, investor, trading coach, and one of the co-founders over at tier1trading.com. And this is a weekly video that I provide you guys with, giving you an outlook of the markets and what's on my radar for the week to come. Now, recently I've been doing this thing on social media where I've been asking you guys, hey, what do you want to take a look at? And I got an interesting comment. A trader said, honestly, Akil, I'll be happy if you emphasize on the world events, social media, and trading plan. Between the three, which of them matter the most? Many traders turn to jump from one information to another, and they have no improvements, but they add greater mass destruction to their trading portfolio. Many thanks in advance. And if you guys are new to the channel, I am a technical trader, right? So trading plan, that is the only thing that I care about. I don't care about world events. I definitely don't care about social media. All I care about is the rules of engagement in my trading plan and does what I see on the chart meet the rules of my trading plan? So what you're going to see here is technical analysis. It's not fundamental analysis. We do follow it. We do understand it. We do use it as far as maybe shooting for home run trades or just more so knowing what to avoid. But what matters most is price action. Price is king. And hopefully by the end of this video, you'll be able to see exactly how important it is. Now, before we hop into it, do me a favor, hit that like button if you're new, or everyone hit that like button actually. Do it. That's the best way you can support the video. But leave me a comment if you like the video. Leave me any questions that you may have below. That way I can address them and hopefully help you out a little bit. And of course, if you're brand new, hit that subscribe button. Make sure that notification bell is hit. That way you don't miss my next video. All right, let's hop into the charts. All right, so today we're going to start off on the Euro Yen, and the Euro Yen is a very interesting pair because it kind of teased us, or maybe not teased us, but tricked us last week. Now I'll show you what I mean. I'm here on the daily chart, and this is what I use as my higher time frame. Let me just kind of make everything good looking again. And last week we saw a nice little break of structure. To put things in perspective, we've kind of been choppy and disgusting, as you can see by the chart, and just holding different levels of structure for the last few months or so. And we finally look like we broke and closed beneath a significant level. And whenever we see that, we go through a four-step process, right? In general, I should say, we go through a four-step process called identify, predict, decide, execute. When we see that break and close, that violation of structure, it allows us to really make a firm prediction on the market and really set up the rest of our trading process, meaning understanding what we're looking for and how we need to take it and all the rest of the stuff that goes into trading. But this is why higher time frame analysis is important, and you need to have that bigger perspective on the market, because even though short term it looks like a break and a close below, looks like we're in no man's land, you should just sell immediately and never buy again. If we zoom back out, or if you go to a weekly chart, either or, you'll see that we're actually not in the clear, right? We actually had a lower level of structure right here, which did end up getting violated, but also a nice little consolidation level down here. And that really changed our analysis. We're still looking for shorting opportunities. We're actually looking for buying opportunities at the previous level of structure, which never ended up happening. And you'll see later, we just got a nice V reversal, but we're still looking for shorting opportunities. But what it changes is where I'm looking for those shorting opportunities to go to. No longer am I looking for, let's say, a trend following type of trade where I would be shooting for extensions and for the trend to kind of continue, right? The trend is your friend until it ends type of stuff. Rather, I'd take more of a trend continuation counter trend approach, meaning I want to be involved with the underlying movement of the trend, but I want to be very, very cautious with my targets and say, look for a retest of previous structure lows. So that's what we're doing here. So we've been patiently waiting for the reversal. You can see we're going to go down to the 4-hour chart now. You can see we got that, and we're waiting for the reversal to come up into our zone. Now, if you guys have been following us, you know how we draw out kill zones. Our technical kill zone is going to be this, right? I can tell you what, I'm not interested in a zone that big. It's a few hundred pips, a little bit bigger than I need, but technically that's going to be it. The zone in which we were looking for starts at this VS1 level, right? For you guys that are new, VS1s are these green and red boxes. They are visual levels of support and resistance, really based off of whatever time frame you want to set them off of. I like to set them off of the higher time frame because that's what I personally use. So this way I don't have to kind of bounce back and forth between the daily chart and the 4-hour, the 4-hour and the hourly. It gives me that visual kind of clue that, hey, Akil, there is structure here, pay attention to it. And my kill zone is going to start at the bottom of this structure zone. and really go to about here, right? Once we would clear about 116.50s, I would lose interest in the trading opportunity to get short. To make this a little bit more specific, I would actually cut this in half and say that if we're going to get a good trading opportunity, it's going to come within the first half of this zone. So this area right here. It would help if that were a different color, but sorry, it's the same color. So I'm still looking for shorts here on the Euro Yen. Again, looking for a retest of our previous structure lows here. And this is certainly an opportunity that we're going to keep our eyes on for the week ahead. It's going to be very similar to a lot of the trend continuation opportunities we looked in the past few weeks videos, specifically on like Euro Aussie and Euro CAD, those type of pairs. So that's Euro Yen looking for shorts. Let's move on to the next one. All right, so the next pair we're going to take a look at is going to be the pound yen. We call this pair the beast, right? This little inside joke on our platform, mainly because it's a very aggressive pair. It has a high ATR, it moves quickly, and well, back when we were rookie, younger, much dumber traders, we used to get destroyed by this pair. So I personally used to call it the graveyard because me and my buddy would place trades at night. We'd wake up in the morning and our accounts would be buried. Jason Greystone came in and started calling it the beast, which I think is a much better name. It's a little less negative, but it is an aggressive pair. It doesn't mean you should shy away from it, but just kind of an inside joke that we have on the platform here. But what we're doing on Old Beastly here is that we most recently broke and closed below structure. So just as we talked about the Euro Yen, waiting for that violation of structure to really make the next part of our prediction, we're able to predict that price is likely to continue lower after this break and close. Now we have put in a nice little 3-bar reversal, which would actually give you the opposite signal, but that's what's going to happen inside markets, right? You get violations, you get pullbacks. They're a natural part of any trend. Now, as we go down to a 240 chart, we're actually going to be looking for something else. And I'm actually going to go one time frame lower, but I want to bring your attention to a very specific level, right? If you kind of look at what, excuse me, price action did here, is we rallied down and then we went sideways, right? When I see these, I call these structure shelves, right? I don't know if that's I highly doubt that's a legit term in the market, but I don't think there's rarely any universally agreed upon terms in the market. So you kind of call things what makes sense to you. And I call it a structure shelf. It's basically like a sideways shuffle. You'll hear me refer to certain ones as high and tight or low and tight flags as well. But it's a level that the market created where it went horizontally for a period of time and then boom, kind of fell off a cliff. And those end up being pretty decent levels of structure. And you can see that price is working its way back up to that level as well. Now, if we go one more time frame down to the hourly chart, you're going to see that that structure shelf is going to play a different role as well. It's actually going to be the starting point for our most recent leg down and also a starting point for a potential advanced pattern formation. So if we look at this as being our starting point, we're going to label this our X leg. This initial move is going to be called our X2A. That's going to be called our impulse leg or our anchor leg. Doesn't really matter. There are slight differences between the two, but in the bigger picture, it doesn't really matter which one you use. It's a term that I rarely use anymore, but I'm kind of, I guess, programmed to say it like that. Anyway, after that, we're looking for a first retracement. That's going to be called our A to B leg. So that's the second leg of our potential pattern. You can see based on where that B leg comes to, we're going to be on alert for a certain type of pattern. If you look up in your left where that X leg starts, right, the little tool I'm using here is going to say that, hey, based on where this B leg completes, this could be one of two things. It could be either a bat pattern or a cipher pattern. That's one of the reasons many traders flock to these Fibonacci-based patterns, these advanced pattern formations as we call them, is because there is some subjectivity to them. That X to A leg is going to be difficult. If you don't take the time to learn how to read a price chart, you're going to have struggles identifying that starting point. And that's what gets a lot of traders into trouble. They see pattern formations as perhaps something you can pick up and play. Unfortunately, they identify patterns that aren't really patterns because they never spent the time to learn the basics of reading a price chart. So their whole starting point is kind of messed up. But now, lost the train of thought. I always get on that rant because it really upsets me. Akil, is this a pattern? No, it's not. Like, what are you looking at? But based on this, a lot of traders flock to them because they're very specific when it comes to their rules, right? If it hits this Fibonacci level, then it's this. If it hits this Fibonacci extension, then it's this. It's black or white. There's no kind of gray area in between. It's yes or no, which is very easy for, very good for a lot of new traders who haven't quite gotten the experience enough in the market to do things that require more subjectivity. But anyway, so we have this requirement for our B leg right here. We then retrace back down. I should click this. Boom. To our C leg. Now again, based on that C leg requirement, you can see it went from, at one point we're looking for potential bat or cipher. Now that my C leg is here, we're only looking for one thing. So we've narrowed down what's on our radar. And if we retrace, or extend, I should say, up to this 886, right? This is going to be our D completion. And the zone between the D completion and our X leg, this is where we're looking for that pattern trade to complete. This is where we're looking for price action to reverse right at that level. And what I love about these patterns is that that X leg is going to be a level of structure. Structure is the centerpiece of my trading philosophy. So if you pay attention to everything I look at in the market, it all kind of revolves around structure. Structure is the sun and everything else goes around it. So if we get another upward thrust here, and I think it looks like that would be a 127 as well. Let me just use my fib eyes. I got asked the question. You guys know I put this on social media each week where, the day before, the day of, I say, hey guys, let me know if there's anything you want to take a look at in the market. And I got a question, I get all these random questions. Akil, follow my page, promote my stuff. Can I give you money? No. I did get one that said, Akil, out of the five senses, what would you say your best is? And I'm like, normally that would be a weird question, right? Some of you guys looking at that like, what? That's weird. But trust me, I've been teaching and coaching and in the public spotlight, I guess you can say, for almost 10 years now. I've gotten a lot weirder questions, some that aren't appropriate to say here on a YouTube channel. So this one was actually kind of mild. And my answer was, not my vision, right? Trading has destroyed my vision. Trading and staring at monitors all day, my vision is horrible. Everything's blurry if I take off my glasses. So it's not vision. I've got pretty bad allergies, so it's not going to be smell. I can hear pretty good, but I don't, I guess that's a strength, right? Touch, I'm a very touching person, so that's a good thing. But I went outside the box. I said my best strength is one that's maybe not in the five. It's sense of spatial awareness, and my awareness is really, really good. Partially from being in the markets and always being aware of what's going on and looking at the bigger picture. Partially being from Philadelphia, Pennsylvania, where I was paranoid of danger. Grew up in not a dangerous environment, but probably a more dangerous environment than both, where you just had to be on alert for survival. So I think that's probably my biggest sense. But if I can go back and change it, I would say that I have a new best sense, right? It is the ability to spot Fibonacci without drawing it on. That is my greatest sense. I don't know what usage it does in life aside from trading, but I can draw a Fibonacci on, or I can spot a Fibonacci level without even drawing on my chart. So that is my greatest sense for whatever that's worth. But anyway, if we draw that Fibonacci on, we have a 127 extension right in this zone as well, giving us a little bit of extra Fibonacci influence for this opportunity. Now, you can see traditional targets, we're going to look for a move back down to the structure shelf right here. But I would say this, if you want to be more aggressive with this, and then this is why we did the top-down analysis earlier, right? We talked about the lower low, lower close, the violation, right? If we have a lower low, lower close, then we can predict that price is likely to go lower. If you're someone that's looking to use this for a bigger move, whether it's full position or partial position, right? You can also use this as an entry into a trend continuation move because you are in line with the overall direction of the market. Right? Based on that daily chart analysis, right? We did a lower low, lower close. You may make the prediction that price is likely to go lower. Well, this can be an entry reason into that trade. So I forgot who asked me this, but this would be a good example of using an advanced pattern formation in a bigger trend continuation scenario here in the pound yen. So sticking with our theme of advanced patterns, we're going to go over to the Aussie dollar where we have potentially two setting up. Now, this was the only trade that I was involved in this week, the only swing trade, I should say, and it ended up working pretty good. I was happy about this. You remember, I think we talked about this in last week's video as well, where we were looking for, right, we had the higher high, higher close, looking for the retest of structure. Nice little 3-bar reversal right here. You can see on the daily, doji, this is going to be a higher high, higher close in a lower time frame. Beautiful trend continuation trade set up to the upside. Let's go down to the 2 hour, the 4 hour to 240. Give you a clearer look. Again, here's that retracement right back into our VS1 zone. Here's that beautiful 3-bar reversal. The rest is history. Now, when I say history, right, this is, for me, this is a pain-free trade. Because we went into the negative, but we never did anything that, I guess, went against the structural integrity of the market. And when I say structural integrity of the market is that, what I mean is that we need to be realistic about stops, right? People tend to freak out way too early, right? My entry is right here. And as you can see, price action kind of went up. Woohoo, making money, yeah, right? And then we came back down. And when we come back down, so many people panic. Oh no, I went from up, I don't even know what this is. Let's do some quick math, right? I went from up 62 pips to down 35 pips, right? A 100 pip turnaround. Life is over. And they freak out and they exit the trade, right? Look, have you ever did this? Come on. You can type a yes in the comment section below. Actually, I want you to do that. If you've ever done something like this, bailing on a trade early because of fear, perhaps, leave me a yes below. And I say that because I want you to see that you are not alone. I want you to see just how many traders are doing that. And I don't mean that to rub it in, because I'm going to be the first one to type yes under the comment section. But I want you to see that this is a common thing. And if there's one commonality with trading, is that most of us fail, because most of us are making the same mistakes. We got to kind of do the opposite of what the majority are doing. But if you look at this from a structural perspective, right? Why is there any reason to fear this? Why is there any reason to bail on your trade? Has the structural integrity been violated? No, right? When you understand the principles of reading a price chart, and when you understand what moves mean what, meaning, most of what the market will give you doesn't matter, but there are very specific moves at very specific locations that tell you a story. One of which would be a lower low, lower close. Now, a lower low, lower close below this swing point wouldn't be the end of the world, but it would be a negative sign. It would be a negative sign in your trade. So obviously, if you're going to put stops on this trade, they should be below here. I think we would all agree with that. So your stops are here for a reason. Your stops are down here somewhere in this location because you don't want to interfere. You want to get beyond the structural integrity point, right? You want to get beyond the point that tells you you're wrong. So if that's the case, why are you bailing when price gets here, aside from fear? Has the market done anything to tell you that your idea might be wrong? No, if anything, it's complemented it, right? The 3-bar reversal is more of an aggressive approach to get involved. What is this right here? Double bottom. Is a double bottom a negative sign? No, it's a secondary touch. It's a secondary hold. You can see there's a doji and a higher high, higher close after that. It's actually a positive sign for you. But people bail too early, and because of that, they lose money. And not only do they lose money, but they don't make the money that they should have won for a good trade. And I say this all the time. I don't think most traders have a problem finding good trading opportunities. It's their exit strategy. And obviously the psychological errors that they're making within that exit strategy, not just from a technical perspective of putting stops and targets in bad places, but psychologically being able to trust where their stops and targets are at. So this is a good example of that. But what this came up to, and why I mentioned advanced pattern formations earlier, is this. We've actually come up off of this move, and we've come into another advanced pattern formation, right? If I take my Fibonacci extension, retracement from this swing point, it's going to be an example of an anchor leg, swing high to swing low, and I draw some funny looking triangle things on there, you'll see that we have a bat pattern right up there at 65.47. And this brings up another interesting dilemma, because I know you guys, Akil, you just said that you're long this, right? And I'm shooting for secondary targets up at this level of structure. Again, using my best sense, which is the ability to bring Fibonacci's on. Watch where that 127 comes. I guarantee it comes right at that red box, because this is my sense, right? Boom, 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 boom. 127 extension right in the middle of that box, right under the 66.50 even handle. So that's where I'm shooting for secondary targets at, an extension upwards. But this gives an interesting dilemma, right? Because I'm still in the trade, but I have a valid advanced pattern formation. I'm an advanced pattern trader. My rules are I'm supposed to trade every single advanced pattern I see. So what do? This is going to be something you need to consider when you go to add multiple strategies. And it doesn't matter if it's advanced pattern trading or moving average trading. Whenever you add two strategies, right, there is especially if they're conflicting, right, one's trend trading, one's counter trend, there's going to be the chance, and there's going to be the likely chance that you're going to have multiple signals at the same time. And in your trading plan, right, your holy Bible of trading that tells you everything you're supposed to do, you need to have a plan of action for it. And if that's something that you don't have right now, that's something you need to consider. If not, you're going to be stuck in this paralysis analysis state. And I was there back in the day where you get two signals, you don't know which to take. So you're going to rely on some type of confirmation bias, meaning that you're going to go off whatever you heard on the news. You're going to go off whatever, you know, Scottie Pippen said on Twitter. Pip Daddy, take that, right? Or you're going to just go off an emotional decision where you're like, I feel like the dollar should be strong, so I'm going to short. And none of that has consistency to it. So it may work the first time, it may work the second time, but in the long run, it's not going to work at all. So you need to have a rule. So my rule for this is simple, right? And I'll give you a secondary one, right? One time, whatever trade I'm in first, I stay in that trade. So I will not be taking this bat pattern. Why? Because I'm already involved in the trade. This bat pattern can win. If it does, good for the bat pattern, bad for me. Most likely, unless it wins and then still continues without me getting stopped out, then that would be good. That'd be a win-win. But those are my rules, right? I'm not going to bail on a current trade for a new trade. But another thing you could do, we haven't talked about this in a while, is excuse me, do something called a stop and reverse. So let's say you were taking a one position trade, a one in, one out trade, and your targets were up here, right? So you bought one down here, right? Because you're buying one unit, whatever that one unit may be for you. It could be a standard lot, it could be 5 mini lots, it could be one micro lot, doesn't matter. But you're buying one unit right here. You could do something called a stop and reverse, where what you would do up here is you would sell 2 units, right? So why would you sell 2 units? Well, what that's going to do is this, right? It's going to sell you out of the one unit that you've bought, giving you profit, right? If you bought something, you have to sell to get out of the market, right? That should be, you know, maybe not Forex 101, but when you buy something, in order to make profit, you have to sell it, or in order to get out of it, you have to sell it. Even your stop loss, you got to sell it. You just sell it for a loss. So the first sell unit is going to sell you out of your previous position, making you money, right? And the second unit is going to put you short one unit in the new position. So it's basically it's like a U-turn, right? You get to the end of the road, you make a U-turn, you go right back in the opposite direction right away, and that's a cool little tactic that you can use in situations like this. Now, bigger picture, there's another. I don't think we need to worry about this too late, but I'll draw it on anyway just because it's on my mind. Another potential advanced pattern formation. If we continue down, X to A to B, B to C, and this would be another potential. This would be a Gartley pattern actually down here, so a little bit shallower than a bat pattern. But we don't need to. Well, I guess this is a weekend video. Maybe you do need to worry about it, but we have. Typically, I don't start worrying about patterns this early because I really want to see that C leg catch its legs first. But cool opportunity here on the Aussie dollar. All right, so we're about halfway through right now. We're going to take a quick break just to give the mind a little bit of time to relax. Also gives you time to hit that like button and leave a comment below saying awesome things about me and how much you love this video. I appreciate that greatly. But I also want to give a little bit of a promo to my buddy and my business partner, Jason Greystone. He put out 2 amazing videos this weekend. If you go to his YouTube page, it's Jason Greystone, click videos, you're going to see these 2 videos right here. One is called Brokers Exposed. It's a short documentary he did. It's about an hour long, just digging into some different brokers, evaluating them, and giving his feedback on what you should look for and what you should be aware of, maybe even scared of, when you go about choosing brokers. And the other one is, can you live from trading income? This is going to be a shorter one, but this is a must-see as well. So if you got some time this weekend, and I know you do, because like most of us, you're on house arrest, make sure you check out these videos from Jason Greystone. They're both amazing. They're both must-watches, in my opinion. Now back to the show. I'm on Euro Aussie on the 4-hour chart, and this has been the pair If you guys remember this, we've been on about a 3-week hot streak with making predictions on this pair, starting with the break of this level right here, starting with the low and tight flag right there, and ending with the trend continuation call from last week's video right here. This thing has been amazing. It's one of my favorite pairs in the market, and it's been good to us as of late. Now, it's not over, right? There is still legs on this pair, just not right now. And again, let's start off by getting some perspective on the daily and asking ourselves, where are we trading at? Well, we know that we are about to test our previous structure lows. And if I draw a horizontal line out, you'll see where those lows actually come to. And take here's something interesting. I think a lot of traders, right? A lot of traders went from having a messy chart, right? I think I've showed you an image, or I'll show you an image right now of a really disgusting chart. So most traders, maybe not most traders, some traders start off with a chart that looks something like this, right? Really messy, lots of indicators, lots of lines. And then they kind of go the exact opposite. One of the reasons you flock to my videos, or at least this is what I've heard, is I keep a very clean chart, and simple is kind of better. But don't be afraid to mark them up, right? With necessary stuff, of course, but don't be afraid to throw lines on your chart, right? I know for me, I love throwing a horizontal line in because I can scroll back and I can just see what price action did, right? Price action's behavior at those lines in the past, and it helps a lot. I actually spoke to a trader of ours the other day. He sent me a screenshot on Instagram, and he puts psychological tips on his chart. And I never thought of that. I think that's a great idea. So on this open black space, he'll have like little messages to himself, little affirmations to himself. So while he's looking at the chart, he's kind of getting that extra bit of motivation, that psychological boost. I think that's a brilliant idea as well. But you can see that we're currently trading at previous structure highs once again, and this is the reason that we chose this level to shoot for, and there's no surprise in that. What we're looking for is what were to happen if we would violate this level to the downside. So there is going to be a buying opportunity here, a counter trend trading opportunity at structure. But if we continue to go lower, if we violate these lows, where can we go to next? And this is a little bit tricky, right? Some would look for maybe right down here, all the way at the lows of about 159, maybe just 160 even. Some would look a little bit higher, maybe right here. I'm going to kind of go right in the middle here, right? If we take this line right here, this is going to be about 163.50s. It comes at a pretty decent structure swap level. What I mean by that is we have support and resistance on both sides, right? So we have a little bit of support there. We have a little bit of resistance here. And again, none of these zones are absolute, guys, right? Just keep that in mind. There's never like one price point, but we're just looking for areas of confluence, right? Support, resistance right there. So I think that's a pretty decent level to go to. And I should actually do this as well. Let's add some Fibonacci's to this and see if that gives us any higher clues from our last swing high to swing low. Get on there. Should probably be doing this on a lower time frame. Look at that. So a 127 right there as well. So we can move this up a little bit. That's a decent level to shoot for as far as targets go. So what I'm saying to myself as a trader as we enter the week is this, and this is from a swing trading and a day trading perspective. If we violate this level right here, this 165.33, then we can look for a move down to about 163.23. So I'm looking to get short from the violation to this move, right? Simple. Yeah, simple concept at least. So that's what I'm looking for Euro Aussie. Again, it's at a halt right now. I'm not really interested in any counter trend opportunities just because of how price action has kind of consolidated down here. But if we can violate that VS1 level, this green box, then I will look for a move down to this level. And again, this pair has played ball pretty well over the last few weeks, the last few months actually. So this is exciting times for it. Now, next we can go to its sometimes twin, the pound Aussie. I say that because sometimes these things move together, sometimes they don't, right? Following up on our conversation. We've had some heated conversations in the live room about correlations. You know, that's one of my one of the points that gets me fired up. There's a few things that get me fired up in the market, but one is to talk about correlations. The other one is anyone that says back testing is a complete waste of time. Those are the things that still kind of make me want to fight and punch things. But this is a good example because right now they are moving very similar. The pound Aussie just a little bit ahead, right? So With the Euro Aussie example, we have not violated that lower VS1 level. You can see here on the pound Aussie we have. So we already have that identification that we had a lower low, lower close. We can already make that prediction that we're likely to go lower. So what I would look for here, and you may have to go down to an hour. You can wait on a 4 hour as well, but look for a violation of this zone. You can see our VS1 levels. This is why I have them on my chart. We don't have to look left and see where structure's at. I can look for a big green box and it's going to tell me where it's at. So if you guys are on the platform and you're not using them, it's one of the best tools we have for you guys, right? No matter, Enigma's good. If you just want to be a pattern trader, use the VS1, structure. Look left, structure leaves clues, right? It's here. So what we're looking for now with pound Aussie is the violation of this level. Same thing. We don't need to run over it again, but look for the violation. Depending on how you trade, it will depend on how you're getting involved, whether you're aggressively on a breakout, more of a conservative breakout where you're waiting for the breakout and close, or you're looking for a retest. But the point is, look for opportunities from 189.50s down to about 188.34, so over 100 pips of potential movement there. Next, we're going to go to Canada Yen and Canada Yen, New Zealand Yen. These are basically the same. So again, going back to the conversation on correlations, and there should be a podcast episode coming out on it soon. I did one, I think it was episode 328, where I shared my $30,000 experience in the market. Experience is code word for loss, but I learned a lesson for it. So my $30,000 lesson in the market, and we talked about correlations. I think there's going to be another episode on correlations as well. I did record a few of the live room sessions where we had some of these good conversations. I just don't know if they're going to make the cut or not. I've got a lot of podcast episodes in the hopper that never get released, but maybe it will. Speaking of which, got a cool episode coming out this weekend, right? Have you guys ever heard of the dopamine detox? Some trader asked me a question about that last week, and I was like, what? He's like, do you think it's good for trading? And for my initial thought was like, what the hell? No. But then I said, Akil, you shouldn't, you preach, right? You should actually look into things before you comment. So I looked into it, and my opinion may or may not have changed. You're going to have to wait till the episode comes out to find out. But it's a pretty cool episode. It's a fun one. It's trading related, but it's not, it's a little bit more general as well, a little bit different. So I like doing episodes like that. But Canada Yen, New Zealand Yen, just think of these as the exact same charts. These pairs, these minor yen pairs do tend to move the same. I think New Zealand Yen's a little bit ahead of Canada Yen, but what we have here is an advanced pattern formation, another one, right? So patterns on the radar today or this week. This one's going to be a cipher formation. Once again, we'll take our pattern recognition tool, or I'll just do this. No, let's do it. We can draw it out. I'm just going to do the automatic one where it just prints it up there and show off and be all fancy like, hey, look at that. Points the pattern out to you. But I personally like going through the ebbs and flows this way. It kind of just gives me practice. It keeps the RAS fresh. It keeps me just retaining the skill of drawing patterns out manually, even if I'm using a tool to kind of help me. And that's important to me. You know how I feel about automation. But our initial leg, X to A. Secondary leg, A to B. Now this time, again, instead of holding at that A leg, we're going to retrace past it, right? What we're looking for here is going to be when we see this, we're looking for a potential cipher. And if we come all the way back up, I know it's a weird looking pattern, but it's good. Trust me, I hated it when it first came out. One of our co-founders, Darren, is the one that actually found the cipher by accident. He was doing some work on Gartley's and he discovered this. I remember when he sent it to us, I was like, Darren, this is horrible. Like, why would I'm a structure-based trader. This doesn't make any sense with anything I've learned about market movement. And he was like, man, just so I tested it to kind of prove him wrong, right? I'm like, I'm going to show him. I'm going to do like thousands of back tests and shows him that his pattern is junk. And then it didn't come back junk and I started trading it. But it's actually a cool little pattern here. But you're looking for a decompletion right up here. Again, if you're using zones, your zone is going to be from that decompletion all the way to your X leg. And you're looking for a short opportunity at this level. So that's going to be Canada Yen. Again, if you go over to New Zealand Yen, you're going to get the exact same thing. Now, lastly, I want to show you guys one thing, and I want to take a little bit of time to brag, but I also want to make a lesson out of it, right? Because the other day, I put out a chart on TradingView, right? A random chart. I've tried to do more because I think I made TradingView mad by saying that I hate the social part of their platform. So I'm trying to suck up, get back in their good graces. We have a really good relationship. I was on the beta testing team for when TradingView first came out, when it looked nothing like it did today. So we have a really good relationship there. So they kind of value when I say things, and I value them. It's a award-winning platform. But I put out a chart on Bitcoin the other day because we were just discussing it in the live room. And very rarely do I look at Bitcoin. I'm not a crypto trader at all, but it fit. There was a technical pattern setting up on it. And whenever I put out a Bitcoin idea, right, I get hammered by the crypto enthusiasts, right? Because I'm known as this Forex guy, right? Now, I think of myself as a trader, right? I am a technical analyst, right? That is my job. I analyze the market. It doesn't matter what it looks like. I am a technical analyst. You give me a price chart, I analyze it. I do understand, I focus mainly in Forex. That's why I get the kind of the label of Forex guy. And I do understand that different markets are different. So you can imagine when I put something out here, it's like, oh, Forex guy trying to do Bitcoin stuff, or, stay in your lane and blah, blah, blah. And I'm just like, well, this is just a traditional, historical, classic pattern formation. You're wrong, Kill. You know what you're talking about, blah, 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 blah. So I like showing this because guess what? This is like the third time I've done this on Bitcoin. All 3 times they've been right. I should start trading Bitcoin, but of course, when I do, I'm going to lose everything because that's how, right, the law of averages work. But look, beautiful ascending triangle here. I said that, hey, I think we're going to see Bitcoin 10K. Boom. To a T. 10K to a T, right? So again, I bring this up, right, to kind of brag in the face of all those haters out there, one. But two, it brought up a good reminder of a lesson that I recently heard, right? I recently did an interview with my good buddy, Michael Lamott, over at Mara Wealth. And Michael spent some time, he's a friend of the program, right? He spent some time on our platform. Now, Michael is a stock trader mainly, right? He has struggled very, 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 very long time in the stock market, turned things around, and is an expert trader. He is a super coach, super mentor, right? And we had a conversation, or we brought him into our platform and to learn a little bit more about technical analysis, because that's not really his strong point. And he went through all the course material, right? He learned it, and he was shocked at how much of the technical aspects that he learned for, quote unquote, the Forex market, because that's our main focus, actually applied to the stock market as well. And he took some of the tricks that we use, not tricks, the techniques that we teach, I should say, and has been using them in the stock market and has really been helping out his trading. And I think that's important because I think people get too caught up over this is a stock analysis, this is a Forex type of analysis, this is a crypto type of analysis. And technical analysis is technical analysis, right? In fact, many of these historical patterns, many of these indicators that you guys are using that trade Forex, they're actually meant, and they originally came out for the stock market, obviously, because that market has been out a much longer than Forex. But the point is, if you know the skill of reading price action, it's going to benefit you in whatever market you decide to trade. Yes, different markets have different personalities, right? Different pairs within Forex have different personalities. The stock market has a different personality than the Forex market. For example, the stock market is a lot more trendy, maybe 70% trend, 30% chop. Right? Forex market is the opposite, about 30% trend, 70% chop. So obviously different techniques are going to play a different role. But if you have the understanding of classic principles and knowing probabilities, when I see this at this particular location, then this is what's likely to happen. Doesn't mean it will happen, most likely to happen. It increases your edge. And I think any professional trader will tell you this. We are just consistently trying to increase our edge by the smallest of digits, whether it's a little bit of an edge, a clue in the market that something is more likely to happen, whether it's a little bit of an edge, whether it's, hey, increasing my risk a little bit, decreasing my risk a little bit, increasing my reward a little bit and changing those ratios. That's what we're looking for as traders. So I thought it was really cool just to see a professional trader that's never been exposed to kind of technicals in the way that we teach them get so much value out of them in a completely different market. And stick it to you naysayers that yell at me every time I share a Bitcoin chart. So that's it for this week, guys. Again, make sure you check out the Trading Coach Podcast. New episode coming out this weekend. They come out Monday, Wednesday, Fridays. I usually release them a day early for UK time. Also, before you leave, hit that like button. Leave me a comment. Let me know what you think. If you have any questions, shoot them in. And if you're new, make sure you subscribe. Not only subscribe, but hit that notification bell. That way you don't miss any random videos that I produce during the week. Hope you guys have a great weekend. I'm excited for the Bundesliga to start up again. It gives me something to watch. And until next time, plan your trade your plan. You guys have a great weekend. You guys have a great week in the markets.